You are listening to the South America Brief. I'm Camila Perez, your virtual information influencer, guiding you through market data trends and stories from the vibrant economies of Latin and South America. Hello and welcome to this podcast. My name is Camila Perez. I am a market intelligence analyst for Central and South America at InfoBroker. In this episode, we focus on a country that more than almost any other embodies the tension between natural resource wealth and economic reality, Venezuela. At the center of this story stands one commodity that has shaped the country for more than a century: oil. Venezuela is a country of extremes. Few nations possess such vast natural resources while simultaneously suffering from such a deep economic crisis. For over 100 years, oil has been both Venezuela's greatest asset and its greatest vulnerability. An economic engine, a political power instrument, and a structural risk. Let us begin with the key economic facts. According to OPEC and the U.S. Energy Information Administration, Venezuela holds the world's largest proven oil reserves, estimated at around 303 billion barrels. This represents roughly 17 to 18% of global reserves. Most of these reserves are located in the Orinoco Belt in eastern Venezuela and consist of extra-heavy crude oil. This type of oil is technically complex to extract and requires high capital investment, modern infrastructure, and political stability. Venezuela's oil history dates back to the early 20th century. After the first commercial discovery in 1914 and the major Barroso II blowout in 1922, the country rapidly became one of the world's leading oil producers. By the late 1920s, Venezuela ranked as the second largest oil producer globally, behind the United States. Production exceeded 130 million barrels per year, driven almost entirely by foreign companies such as Standard Oil, Gulf Oil, and Royal Dutch Shell. Economically, oil transformed Venezuela from an agricultural economy into a classic petro state. By the mid-20th century, more than 90% of export revenues came from oil. These revenues financed infrastructure, urbanization, and rising living standards. In the 1960s and early 1970s, Venezuela had one of the highest per capita incomes in Latin America. However, this dependence also created long-term distortions. Other sectors declined, imports replaced domestic production, and the economy became highly sensitive to oil price cycles. Economists describe this as a textbook case of the Dutch disease. A major turning point came in 1976 with the nationalization of the oil industry under President Carlos Andrés Pérez. This process was orderly and included compensation payments of roughly $1 billion to foreign companies. The state oil company, PDVSA, was created and, for many years, operated as a highly professional and technically advanced company. During the 1980s and 1990s, PDVSA ranked among the most efficient oil companies worldwide. In the 1990s, Venezuela reopened parts of the sector to foreign investment under the so-called Apertura Petrolera, particularly to develop the heavy oil resources of the Orinoco Belt. By the late 1990s, production had recovered to more than 3 million barrels per day, with the United States as the primary export destination. This model changed fundamentally after Hugo Chavez took office in 1999. Oil increasingly became a political financing tool. The decisive rupture occurred after the PDVSA strike of 2002 and 2003, when nearly half of the company's skilled workforce was dismissed. From that point onward, technical capacity steadily eroded. Forced state control, declining investment, and the withdrawal of major international companies followed. Oil revenues were redirected toward short-term social spending instead of maintenance and reinvestment. As a result, production collapsed. From over 3 million barrels per day in 2000, output fell to around 500,000 barrels per day by 2020. Under Nicolas Maduro, mismanagement, corruption, and international isolation further accelerated the decline. U.S. sanctions imposed from 2017 onward severely restricted exports and access to financing. Venezuela was forced to sell oil at deep discounts via indirect channels, primarily to Asia. This brings us to the role of the United States. Historically, Venezuela was a strategic oil supplier for U.S. refineries, especially along the Gulf Coast. In recent years, however, Venezuela has become part of a broader geopolitical strategy. Under Donald Trump, oil sanctions were used as economic pressure instruments. In his second term, oil has been framed more openly as a strategic asset linked to supply security and competition with China. From an economic perspective, Venezuela's oil sector now represents a long-term reconstruction challenge. Experts estimate that investments of $80 to $100 billion would be required to restore production to 3 million barrels per day. Without institutional stability, legal certainty, and investor confidence, this potential remains largely theoretical. Venezuela's experience demonstrates a fundamental lesson of resource economics. Natural wealth alone does not generate prosperity. Only strong institutions and long-term economic governance determine whether oil becomes a foundation for development or a catalyst for collapse. Thank you for listening to this analysis. If you would like to explore further economic and geopolitical insights on Latin America, you can find more podcasts and reports at InfoBroker and InfoBroker World. My name is Camila Perez. I look forward to welcoming you again in the next episode. For more details, links, and further insights, check out the show notes. By the way, I am 100% AI generated. My voice was created with 11 Labs, and I'm here to bring you curated knowledge with a human touch. This podcast is powered by InfoBroker World, your partner for market intelligence and custom research on Latin America. Until next time, stay informed, stay curious. Hasta luego.